Manoj Muralidharan joins us now. Manoj, good morning. Thank you for joining us. We are debating that when was the last time Nifty fell 4 months on the trot now. And looking at the SGX, it's going to be 4 months today after a gap of nearly 20 years. My question is that if the underlying market mood is sticky and bearish, I hate to use the word bearish, but I think that's the right word, then why are Nifty futures trading at a premium? The minute I say Nifty futures premium, I don't have to even finish the question. Now let's hear the answer.
Yeah, good morning, Nikunj. That's an interesting question. Nikunj, there is a correlation which happens between the debt market and the Indian equity markets. I'm sure we all know that. And interest rate is a subjective of the debt market. So if you see almost 2020, the first quarter onward, we had seen huge debt outflows which is happening in the Indian market. And obviously, the equity market is following the same because we see the banks and the financial, which is a good 32% of your Nifty gets affected, and we see the money coming out of the equity as a hedge as well. But of lately, if I might say that at least in the last 3 to 4 months, the last 2 months, we have seen some debt inflow, if not much, 6,000 odd crores. So there is a possibility that this outflow which is happening into the equity markets, if I'm not mistaken, FY23 has taken out more than 1,90,000 odd crores from the Indian equity market. So we would see that curtailing eventually. Now, to answer your question as to why the Nifty future is in a premium, it is in a premium, I guess, since October series because those 20-22% of the FIs which classify as P-notes, they usually use or select an instrument which gives them fast trades. So if you see, ideally after 2018 onward, we have seen that participation come down. They used to be a good 20-28%, which is actually fallen down to 14 to 16%. And they use more of index options. Now, there is a correlation between your Nifty futures and Nifty options. So we are not really getting into the math there, but that simply says that when you have a premium, let's say in terms of points, which is more than an 80 to 90 odd points, they prefer index options as an instrument to use this strategy and make money, which usually happens toward the month, especially during your expiry time. So to answer your question, from October onward, there is a switch in the instrument which is happening, which also is a derivative of cost of carry, which is nothing but that the additional premium that you pay to carry a position from month on month. So if you see, that is exactly one of the reasons why, despite so much correction, the India VIX has not really gone beyond a 2021. Ideally, from 18,600 to the low of 16,400 that we made, we should have actually crossed a 26% in terms of VIX as well, which is still at 15 to 16 if you see, because huge amount of options selling is where the money is being made. So I believe that the first indication is the Nifty future premium would trim down to a good 40-45 points. That would be the first indication that we are seeing money shift to this instrument, and then possibly the Nifty might make a base, and we might see some base building happening with a range bound mode in the Nifty.
Okay. So do you think it makes sense to chance your arm and roll over your Nifty long positions? Or it may not be a great idea because premium is there?
Nikunj, the interesting part is, I guess since 2017-18, there is a beautiful pair relation which goes on between your Bank Nifty and Nifty because the Fin Nifty was introduced off lately, let's say a good 6 or 7 months. So this pair trade, and if you remember the HDFC event which happened in April, and we saw the culmination of that in December, the Bank Nifty futures positioning was a good 30 lakhs and above. So on an average, it used to be 18 to 20 odd lakhs. So this additional 30% positioning that you see in the Bank Nifty usually has an event to carry. Now, even in this series, if you look into the April last 10 to 12 days, the positioning has already been taken on the long side for the April series. So I'm afraid that this is not a time to short the market, especially because if more than one third of your index is biased to a positive, trend, and if there is a short coming in, then it makes sense that the Bank Nifty might rule or maybe trade the Nifty in the positive side. So rolling Nifty, let's say we give it a 200 odd points. Once we see a Nifty closing above 17,200, certainly roll your positions. Now, if it is long position, obviously the 100 points premium, like you mentioned, does not really help. Unlike if it's a short position, you get that advantage of that. So wait for a closing of 17,200 and above, because once we close above that, the Bank Nifty has got enough potential inside it. With that good 32 odd lakhs of positioning that we see, we might get a good 1,400 to 1,600 points. To answer your question, should you roll the Nifty futures long? As of now, wait for 17,200. But if your time Nifty, certainly roll it all with a stop loss of let's say 38,500, and the possible target can be 40,200 to 40,500.
Okay, Manoj, appreciate your time and so glad you could join us.